Welcome back to the stock portfolio updates. This is potentially the last stock portfolio update for the year, and my stock portfolios are sitting at a combined value of over $98,000. That's made up of the $56,981 in my stake portfolio and the $41,092 in my Vanguard portfolio. Today I'm going to be giving a quick update of how the stock portfolios are looking, my plans going into the end of the year, and if I'm going to hit that big $100,000 mark before the end of 2024. So first, giving a general wrap up of my holdings, you'll be able to see that there have been some changes since the last video. I didn't do a video last week just because I was extremely busy, but this week I'm going to go into some of those changes that have happened. I actually sold a little bit of my Apple position. I trimmed it down a little bit. So it's still one of my bigger holdings. So if you have a look at the allocation, it's sitting at 10%. So I decided to sell down so it was 10% of my total stake portfolio. So I believe it was around $1,500 I sold, give or take, maybe a bit less. And what I decided to do with that money was actually invest it into Amazon, I believe it was, because I've done some recent purchases here and there, so I'm just trying to remember. And I've taken my Amazon position up to 14.32 shares, or 3,200 in market value. That takes the allocation for Amazon up to 9%, so pretty close to my Apple position. Google as well, that's sitting at 22.66 shares. I don't know if I touched on it before. Actually, now looking back, the money I sold from Apple, I put into Google, and then I deposited some extra money into this stake portfolio, and I used that to buy my Amazon stocks. So yeah, I grew my Google position. It's up to 22.66 shares, and that's now 12% of my portfolio value. So it's now bigger than Apple, and Amazon's pretty close to Apple now. I'll go into some details why I sold out a bit of Apple later, but I'll just keep wrapping up through. Nothing's changed with Costco. It's still probably a bit too expensive to buy in at the moment for me, and it's sitting at 3%. Microsoft, same thing. I haven't touched that, but it has had a little bit of a run up recently, or it did, and then it came down. And that's sitting at around 17% of my portfolio, or 13.6 shares. And VOO is still my biggest holding by far. So this is the S&P tracking ETF, and that is sitting at $17,155 in equity. These figures are all USD, not AUD, and that's $31.4 shares, or I'm up around $4,000 in total, or 30% in that holding, as I've dollar cost averaged in, obviously. But yeah, giving a quick update, I decided to sell out of Apple a little bit. Apple's been doing really, really well recently. I didn't completely sell out of my whole position, as you can see. I'm up 71% in Apple, and my average share price is $148, so I'm massively in the green with it. And pretty much I decided to just take some of the gains off and allocate those funds elsewhere. Apple is trading quite expensive at the moment, as you can see, a 41 PE ratio. It's trading a lot higher than stocks like Google, for example, which is where I put the money when I sold this, and it's not having the same growth that they are. I still believe in Apple long term. I still think it's a very strong company with good fundamentals, but I think growth wise and justifying the valuation, there's other stocks that are a bit more attractive to me. But yeah, I still own it as 10% of my portfolio. I still obviously have exposure in my ETF as well, and it's trading up 12% in the last month, when around $254 a share currently. So it's done very well, 22% in the last 6 months and 30.7% in the last year. So it's been a good recent second half of the year for Apple investors. So I'll keep updating on that in the future. But talking next about the stock that I used the money from the sale to buy, and that was Google. Google's now sitting at $191 a share and is up 36% this year, and takes my total equity to $4,337. So this is a position I've been slowly growing. I bought it, had a nice run up, and I bought some again now. So that's obviously lifted my average share price to $161 per share, which is still $30 a share cheaper than what it's trading now. So I'm up around 18.5%, or $678. So that's kind of where the money's sitting at the moment. It's had a very good month, so it was a bit painful to buy it now when I was previously buying it at a much cheaper valuation, but I think still long term it's a lot cheaper. Only trading at a PE ratio of 25, again compared to Apple's 41, so it's in my opinion, higher growth at the moment. And it's when my kind of philosophy is, if there's a good company I believe in that I've already got an existing position in, and it's kind of trading a bit volatile as Google was, and I still believe in the company long term, I try to use that as an opportunity to buy in to the position. I did the similar thing with Apple not that long ago when it really had a bit of a dip, like 6 months ago, and I saw the gains, and I've just decided to take a bit of money off the table. But yeah, Google I believe in long term, so hopefully I'll reap the rewards of that, but I'll keep tracking and doing these videos so we can keep updated. Next is Amazon. Amazon is a stock that I held years ago, sold it, rebought into it, was very small, and now I've grown the position, and it's now sitting at $3,200 in equity. I'm quite upset that I didn't buy the dip back, so I actually really wish I was buying Amazon back here. I was considering it, I didn't do it, and that would have been an amazing gain. But again, you can't just always have a backwards facing look. You got to be looking at it now. And whilst Amazon does trade a bit expensive at the moment at 47p ratio, higher than Apple, I think the growth of Amazon is only going to go up. Its free cash flow, and all across the board, it seems to be heading in the right direction. And I'm up around 21% on this. And because of that big recent buy, my average share price shot up to 185, but the stock is still trading at 224. So I'm not complaining at all. It's had a bit of a drop this week, like many tech stocks did, with around the US Fed, their kind of interest rate view for 2025. But again, I try to keep a long-term outlook on these things. I'm not too worried about one or so quarter of results. I think long-term, like I said, I've been investing in this portfolio for over 4 years now. So hopefully in another 4 years, I guess another 6 years, then I hit that 10-year mark. I don't think I'll be too worried about what the valuation I bought was. Obviously, if you can buy cheaper, it's always better. But I think if you're in good, strong companies long-term, you should be all right. Overall, that's taken my portfolio value to nearly $57,000. So getting closer to that $60,000 mark, which will be a nice another mark to tick off. And having a look at my Vanguard portfolio, you can see this is now sitting at $41,000. I have 2 pending transactions. I put these ones in yesterday, so they haven't obviously actioned yet just because it's the weekend, but it's an $83 buy of Vanguard VLC. So that tracks the Australian Large Companies Index, which is on a bit of a dip. It's dropped down, and I'm just buying 1 share because I had some money left over. And the big buy is into VGS, which is Vanguard's International Shares ETF, and that's almost $2,000. So I'm going to be growing these positions of mine, and then hopefully long term, this will play out for me. My money in VLC, I kind of use it as the dividends, and one day if I want to buy a property or anything and I have to liquidate some stocks, it will probably be VLC. But VGS is kind of a bit more long term for me. I think there's better growth opportunities there, but that's where I'm putting my money. And if we have a look at the Excel spreadsheet, you can see this kind of gives a nice overview of how things are looking, especially weighting wise. Having a look at the American portfolio, you can see VOO is basically 50%, 49%. It was 52%, but I put in some money now, so obviously it's swinged it a little bit, but the goal is still to keep it at 50% of the portfolio. The reason I do that, I've said a lot on this channel, I don't think I'm some amazing investor, so making sure I have exposure to some ETFs and I can get the overall markets return isn't crucial, and then that remaining 50% I kind of just use as fun money, where I can try to maybe beat out the market, invest in companies I believe in, kind of just take a bit of a gamble. But then I also have my Australian portfolio, so pretty much that bit there is probably only give or take 30% of my whole portfolio value. So it's not the biggest deal, but I do enjoy it. It allows me to keep doing these videos, keep it fun, keep me doing shorts, things like that. So I like being able to pick stocks every now and again. So that's kind of how this portfolio is weighted. The goal is to keep it 50%, and then the rest of it I'll see. Microsoft, I probably want to get that down to around 15%, but I don't know if I'm going to do that through a sale or just growing my other positions. And then having a look at my Australian portfolio, you can see VLC is 40% and VGS is 60%. So that's the weighting I'm looking for, which is nice. Not 50-50. At one point I wanted 50-50, but I think 60-40 works well as well. I think there's better growth opportunities in America and around the world than just here in Australia. The VLC did have a very big run up this year, and it's especially with the banks prices all going up. Westpac and Commonwealth went up around 40%, and then some of the other banks went up 10%. So it's had a very good year, so I'm not complaining. Having a look at the graphs, this kind of just puts it into a bit more of a long-term view. Obviously, this doesn't have the figures for now. That will only get updated on the last day of December. Like, for example, you can see my December figure starting the month was 51,498, and now I'm already closer to almost 57,000, so it's been a very good month, especially with the deposits. And then my Vanguard portfolio was sitting at around 37,650, where now it's sitting at over the 40s. So it'll be a very good month for my stock portfolios. And this kind of just puts it into a view where you can see it's slowly going up over time, which is exactly what I want to see as I continue to dollar cost average into the portfolios. And especially, it's hard sometimes to keep a long-term approach when you see the money you're putting in and you don't necessarily see the growth completely. But when you put it on a graph like this, you can see over the years it's slowly going up. And that's exactly what I want to see, the snowball effect, bigger dividends, bigger growth. That's kind of the goals. And speaking on dividends, you can see my dividends here. I'm not a dividend investor by any means, but I do track it on here just to keep on top of things. And my goal for next year is to hit $2,000 of dividends in 2025. So I think I should be able to do that, especially with my Vanguard portfolio growing. That I get a bit more dividends from that. And I think I'm actually going to be getting a decent sized dividend from VOO as well now going forward because of how big it's getting. But yeah, my goal is to hit $2,000 in dividends in 2025 alone, which I think I'll be able to do. Having a look, ending with the portfolios again, I'll do one wrap-up video. I watch a lot of Joseph Carlson, if you've seen any of his videos, and I draw a lot of inspiration from that. He does very good ones if you want to check him out, of portfolio updates. But yeah, the goal is I can potentially hit $100,000 by the end of the year. If I just deposit some more money into the portfolio, I can just do that if I want to and hit that mark, but I'll see. It'll be nice to tick that mark off, or I can wait till 2025 and just do it again. But yeah, it's been a really good journey this year. I'll do a bit of a wrap-up video, how much I started on, how much I ended on for the portfolios. But the saying 98,000 feels pretty crazy when I look back at the previous months, and I remember it being in the 80s, the 70s, the 60s. So it's been a really good year. But I'll keep doing these videos into 2025, and hopefully I can just keep building these portfolios long term and keep showing you guys on this channel. Cheers.